We now want to start to think about what we can do to these reports, what the customization is, which is going to be in this basically ribbon up top. We have the items in kind of the grayed out ribbon over here. And then we have the more customized options on the right in this customized field. And currently we have the switch to the modern view. It's possibly a good idea to go into this because this is what they're A/B testing. So I switched it over to the modern view, which looks like it's what they're kind of leaning towards us moving into. So you would think possibly they might have just the modern view at one time after they do their A/B testing. Noting, however, we could switch back to the classic view here, and we might take a quick look at both of them just in case they choose A versus B on the A/B types of testing. But this is a little bit cleaner, and I think it's got a little less repetition than the classic view. So let's take a look at it here. So we've got the report periods. Now note, as we go through this, we're focusing in on it for the balance sheet, but most of these options will be the same for all types of reports, although we have to be careful for certain things which will be different from report to report. Noting here on a balance sheet report, we're reporting information as of a point in time. Therefore, as you can see, when we did this comparison, it basically just has two columns because it's the point of time 12/31/24 and 12/31/25. Whereas if I go to the income statement, this is what we could call a timing type of report. Let's go ahead and switch this to the modern view as well. So we have a timing report, and notice you have an extra column over here. Why is that? Because this is showing the performance over a time frame. It needs a beginning and an ending period. We'll talk about income statement reports a little bit more later, but as we think about the customization up top, it might look a little bit different if you're thinking about a report that's going to be reported as a point in time versus a period or a time frame like a profit and loss report. So I just want to kind of keep that on mind or in mind. Let's go back on over to the balance sheet. So we've got the period. So when we hit the drop down here, we can choose the custom period, which is what we have been doing, and then we've been tabbing through, and we chose a 2-year time frame in our case to show 2024 and 2025 side by side. Oftentimes you might be just looking at one period at a time, basically 1 year at a time, in which case you might use the default type of settings. So you got the custom dates, you've got today. If I go in today to today, it's January 27, 2025 over here. So that means, again, this being a report as of a point in time is going to show that as of this point in time. It doesn't matter what the beginning date is. Notice I don't need a beginning date on the balance sheet. Whereas if I do that on a profit and loss, just for comparison's sake, profit and loss or income statement for today. Now this should be giving us the what is happening, the activity, I believe, just for 1 day. So that's possibly not as useful on the income statement because usually we want a range that's going to span at least a week to possibly a month to a quarter to a year. Let's look at the next one down. If I go to the balance sheet and I look at this week, then what are we going to get on the balance sheet? Notice it's at the end of the week. So we're not there yet, but it picked the ending point of the week, February 1st. Now this is being reported as of February 1st. It's not a time range. So there is no really beginning date, right? It's not for the week end. It's not, I don't need a starting point, right? I just need that ending point. Whereas on the income statement or profit and loss by comparison, notice now it has given me a range, January 26th to February 1st, and it's given me the activity, what has happened during that time frame. So again, the point is income statement, I need a range. I need a beginning date and an ending date. Balance sheet type of reports are as of a point in time. This is this week to date. So now we have the week to date. And then we have this month. So this is going to be the current month. So these are just, I could choose, the current month with basically a custom range to help me to pick that out. But here we have just the month. If I pick that over here, this month, then again, it's going to give me the activity for the month. If I go back on over and we're going to say this month to date. Then we have the quarter, which is the other way to see things, remembering that there's 12 months in a year. So if I divide 12 by 4, we get, the 3 month quarters. And then we're going to say this quarter to date, this year. So this is going to be fairly common, right? So now we're going to get the full year's worth of data for the current year that we are working in, which means basically as of the end of the year. Now, notice if I go into the checking account here, then we get to what we might call a general ledger report. And notice the range here is January through December. So let me just show you that again. If I go back, notice that the balance sheet is as of December 31st, 2025. This only needs one date. It doesn't matter what the beginning date is because it's as of a point in time. But the range becomes important because if I say this is a year, then when I go into the detail, like I often will when I'm kind of working on things, I'm going to want to go into, say, the checking account to see what I posted, get into, in essence, a general ledger type of report, which they're calling a transaction report. This is a timing report, which gives me a range from January to December. So when I look at a balance sheet, adding a range is important, not because it really has an impact on the balance sheet, which is reported as of a point in time, but because when I use it to drill down like an auditing process to the general ledger or transaction report and further down into the source documents, the forms that created it, this report will be given the range, right? So that's going to be useful. So then we have this fiscal year to date, yesterday, recent, last week. And so now we can go into the last time periods like last week date, last month to date, so on and so forth. And then we have last year. So I could just go right into here for last year for 2024, last 7 days, last 30 days. If I wanted to do a comparison of 30 days instead of by month, which is going to be, uneven, 31 days, 28 days, 30 days, last 90 days, since 30 days ago, next week, next 4 weeks, and next year. So usually you're going to be using something like the year to date or the current year, or you might just simply type it in with the custom date. So I'll say custom date. And then notice I have a range here, even though the balance sheet doesn't have a range. Why? Because if I put a range in going from 01/01/24, let's say to 12/31/24, then it doesn't really matter down here because it's as of December 31st, 2024. But when I drill down, it's going to give me the detail for the time frame. So I have all the information to drill down on. If I don't want a whole year's worth of detail when I drill down on it because I'm working in the current month, I could go back here and just say, what if I made this just for December? This number is going to be the same because it's the ending point. So I'm going to say this is 12/01/24 to 12/31/24. Notice it's the same here. That didn't change. But if I go into it, then it's going to give me the detail only for December. So you see how that range is useful for when I drill down into the general ledger so I can narrow down the amount of activity on the balance sheet. If I do that same thing on the income statement, there will be a change. Meaning if I give a custom date range and I go from 01/01/24 to 12/31/24, then this number is going to differ than if I change this to 12/01/24. Because now it's showing the activity for 1 month time frame. I think that differed. It should, it'll typically differ depending on the data input that's going to be in there.